Hello traders, the title of the video is how to filter out a gigantic CCI indicator, a trading mistake like a pro. Alright, so you want to know how to filter out a gigantic CCI indicator, a trading mistake like a pro. So on this chart you can see that we have a gigantic head and shoulder chart pattern and a green line. Okay, so hold on. So this is the head here, the big head. This is the left hand side shoulder. This is the right hand side shoulder. Okay, this is what we call a slanted a head and shoulder chart pattern. Instead of having the neckline being horizontal, we have the neckline is okay, a diagonal. All right, so this is what we call the slanted head and shoulder chart pattern. When we are talking about head and shoulder chart pattern, traders often think that the neckline, okay, should be somewhere here, which will be okay, the horizontal line is somewhere here, but we can also put it like this. All right, so this is the neckline right here. Okay. So I'll color it now into pink, all right? So this is the neckline. Instead of the horizontal neckline, we have a slanted, okay, head and shoulder chart pattern, all right? So we have a gigantic, you can see that the head is quite big. That's why I give the title a gigantic, okay, CCI trading mistake. So it's a gigantic head and shoulder chart pattern. All right, right here, right now. All right. So if the price break below the neckline, professional we use the height of the head, and then we project it down below the neckline. Okay. So quite deep. So bringing us almost to the level of 0.70. All right. Almost to the zero. Okay, level 0.70. That's the target level. It's quite deep. I do not expect this stock to go down as far as it is. As I always told you before, whenever you set the ultimate target, so the ultimate target is in the zone of 0.70, but the midpoint target, all right, we divide it into 2, all right. One more time, you can see that because we have a slanted head and shoulder chart pattern, it will be better to draw the line, if you want to set the midpoint target, to draw it in a way that is parallel to the neckline. So I'll be drawing like this and dividing it into 2. All right, it's not easy. You can see here is the midpoint. We draw that line that is parallel to the pink line. So it's up to you. All right, it's up to you. It's up to you, my friend. Normally we should draw it like this to have a harmony. So you'll be talking about level of $11. So you'll be saying that the midpoint target is somewhere between the $11 and $15 because it's a slanted head and shoulder chart. But if you put it vertical like this, then you have to do it like this, which does not make any sense at all. All right, so I would say between $11 and $15. But those who put it in a horizontal way, so you will be doing like this. Hold on, please, traders. Put it in vertical, and then you put it down like this. It's almost to the 0 level. All right, somewhere down there. All right, and then you'll be dividing that ultimate target into 2. So always remember the midpoint target. Again, in the zone of $11, all right, in the zone of $11. So let's go back to our main topic, how to filter out a gigantic CCI trading mistake like a pro, all right? So I've been telling traders recently that when the price break below a trend line, you can see this trend line here, I'm going to color it now into red. If the financial instrument break below a bearish trend line or a bullish trend line, you see here, it break below, yes or no? And the CCI at the same time break below the 0 line, that is a high probability bearish CCI trading setup. On the other hand, if the price breaks below, if the price breaks above, repeat correction, on the other hand, if the price breaks above a bearish trend line, as it did here, and the CCI, or at the same time, breaks above the zero line, you see it was breaking above the zero line. When the price breaks above the bearish trend line, this is a bullish CCI trading setup. It's in fact a high probability CCI bullish trading signal. All right, so you can see that from there onward, the price went up big time. All right, CCI crossing above the zero line and the price crossing above a bearish trend line, that is a high probability bullish CCI trading setup. One must now implement a top-down trading method to trade it, whether for swing trading or day trading or position trading. Here again, you can see that the CCI was going below the zero line. At the same time, the price was crossing below, okay, the bullish trend line. But the point of what I want to highlight today is that though this is a high probability trading setup, there is a gigantic CCI mistake that traders are making, and we want to learn how to filter those gigantic CCI trading mistakes like a pro. So first thing first, to filter out those gigantic CCI trading mistakes, one must wait for the candlestick bar to close. So because I'm on a monthly chart, okay, that candlestick bar is not yet closed because today is the 28th of May 2017. So if one is using this as a high probability trading setup, it's a gigantic CCI trading mistake because the candlestick bar is not yet closed. Though the high probability trading setup is forming, it's not yet cooked, it's not yet ready, all right, it's not well done. All right, so one must wait for the candlestick bar to close. So the first step to avoid the gigantic CCI trading mistake in this case is to wait for the candlestick bar to close. Are you on a daily chart? That daily chart candlestick bar must close. Are you on a weekly chart? That weekly candlestick bar must close before we can say that we have a high probability trading setup. Are you on the hourly time frame? That hourly candlestick bar must close. Are you on a quarterly chart, monthly chart, yearly chart? Are you on a 3-day chart? Are you on the 4-hour time frame? That 4-hour candlestick bar must close. Otherwise, it's not yet ready. Okay. So here, a lot of CCI traders that know about this trading setup, you can see that the CCI is below the zero line now, but the candlestick bar is not yet closed. If, for instance, the price managed to close really up, if we turn out this bearish candlestick bar turn to become a bullish candlestick bar at the end of the month, you'll see that the CCI will go back above the zero line. So do not assume that the high probability setup is ready, all right, until it's truly ready. Okay. All right. The next thing that I want to highlight here, talking about how to filter out a gigantic CCI trading mistake like a pro, which I mentioned last time to traders in a video that titled, hold on please my friend, have my book here, all right, titled How to Avoid Specific Bearish CCI Trading Mistake Very Fast. I think that's the video. I think that's the one, all right. How to avoid specific bearish CCI trading mistake very fast. Check it out. So, one mistake that they are making also is this, all right? When we are talking about a high probability trading setup, in this case, CCI closing below the zero line, candlestick bar also closing, and the price breaking below a bullish trend line, all right? We do not want that candlestick bar to be too long. You see, this is quite a long candlestick bar. We don't want that. We don't want that. We don't want it to be too long. We want it to be average candlestick bar. We don't want it to be long like this. We don't want it to be long like this. We don't want it to be long like this. The reason is we do not want to be the last person selling. So this candlestick bar is not short, it's not average candlestick bar, it's a little bit volatile. So how do we handle that? Okay, so what you need to do, if at the end of May it stays like this, repeat, if at the end of May 2017, if at the end of the month that candlestick bar stay long, all right, gigantic, so to speak, we will highlight the high and we will highlight the low because we do not want it to be too long. But if it's long, highlight the high and the low and highlight also the median line. So once that candlestick bar is closed, though the CCI closes below the zero line, all right? But in this case, the candlestick bar happened to be a long candlestick bar. We don't like that. Therefore, we highlight the high, the low, and the median line. What we will expect the following month, so in this case, because we are in May 2017, the following month will be June 2017. All right. So if you are watching this 50 years ago, 50 years later, if you are, let me speak my proper American accent. All right. So we have traded from different parts of the world by making a bit of joke to my friend Americans. So we have people from Nepal, India, Malaysia, Indonesia, all right. But I make a bit of fun of Americans at the moment. So I'm not ignoring other traders, all right. So if at the end of this candlestick bar, all right, it's a long candlestick bar, we highlight the high, the low, and the median line. What we will prefer the following month, which will be June 2017, we will prefer in June. Okay, when the monthly candlestick bar in June is starting, we will prefer a rally, all right? So we will wait if the candlestick bar is too long. In order to filter out the gigantic CCI trading mistake, we will prefer that if that candlestick bar is closed, we prefer that the following candlestick bar, we have a rally to the median line, and then from the median line, we see a resistance. Then we can look for an opportunity to sell if the price is weakening near the median line. That would be the best scenario in case we have a long candlestick. You see here? So anytime we see a long candlestick bar, you see here, this is how professional play. A long candlestick bar, it's not easy to sell after that. We will prefer a rally up. You see? So that rally here, you see this is a bearish candlestick pattern. So you see a long bearish candlestick bar and then small candlestick bar that stay within the range of that long candlestick bar. Do you know? I talked about this before. Have I not? All right, let me know. All right. So when you see a long candlestick bar, you have a small candlestick bar like this. All right, that stay within the range of the long candlestick bar. It's an invitation to sell. That's exactly what a professional did here. So when we see a long candlestick bar like this, we will prefer a rally before we sell. The reason is we don't want to be the last person to sell. So we highlight the high, the low, and the median line. So those are the key levels we are watching for. So if you break below the low and find a resistance, that's a bearish trading setup. Break below the low and find a resistance, that will constitute a bearish trading setup. Or if you rally up to the median line and find a resistance, that will be a bearish trading setup. Our ultimate target in this case will come down to the low of that candlestick bar. And if it breaks below that low again and find a resistance, we'll take it down. All right, but if it breaks above the high and find a support, well, we will buy instead. So highlight the high, the low, and the median line. If you have a long candlestick bar after the CCI closes below the zero line, though this is a high probability trading setup, we do not want that candlestick bar to be too long. This is how we avoid, the gigantic, how we filter out a gigantic CCI trading mistake like a pro. So gigantic candlestick bar, we will prefer it a rally again. So you see again here, when you see a long candlestick bar, you want a rally. You see here, it's exactly. So you see small candlestick bar staying within the range of that long candlestick bar. That's an invitation to sell. Beautiful trading, beautiful. All right. The bear are controlling the market. That's what it meant. Long candlestick bar, small candlestick bar, to the edge. If you find a resistance, you want to sell. Here again, long candlestick bar, rally up, bearish. You see another bearish pattern here. Down, it went down. Okay, so when you see this is a tricky one. This one was okay because here what has happened, you want it to go below the low of that long candlestick bar. So in this case, you'll be highlighting. You see this candlestick bar here. You'll be highlighting the high, the low, and the median line. In this case, there was no rally into the median line. So it's very, very difficult to trade this type of setup because you don't know how far it's going to go down more. They sold it big time. Now how far it's going to go down more. You see, as it's going down, people are buying. You see the tail of this candlestick bar. It's quite challenging to sell at this. Okay, but finally it went down. So you want to break below, retest. But it's quite tricky here because it just went down. Okay, all right. So the same thing, though we have a higher probability trending state of a CCI break below the zero line, prior breaking below a bullish trend line. If the candlestick bar is too long, you want to highlight the high and low and the median line of that candlestick bar. Remember, the first thing that we are looking for, that candlestick bar on that time frame must close. Second thing we want to work, we don't want that candlestick bar to be too long. If it's too long, we highlight the high, the low, and the median line. This is about know how to filter out a gigantic CCI indicator trading mistake like a pro. The opposite is also true in an uptrend. So if, for instance, here we have a long bullish candlestick bar, we'll do exactly the same thing, the high, the low, and the median line, and we will prefer it to pull back, all right? So if you have also, one more time, let me clarify this, you have a long bullish candlestick bar, and then you see, all right, you see small size, bearish candlestick bar within a range of that long bullish candlestick bar. If it starts turning around, that's an invitation to buy. All right. If you have any question or suggestion, all right, feel free to put in a comment section. In due course, I will be busy recording another video to answer your specific question. Though we have a gigantic head and shoulder chart pattern, all right, we don't want the candlestick bar to be also gigantic, and we want to filter out the gigantic CCI trading mistake like a pro. Until the next time, my friend, enjoy yourself and be very happy. We are the TSTW24 traders talking about know how to filter out a gigantic CCI indicator trading mistake like a pro. Happy trading to you all, and speak to you soon. If you think that this video has been truly useful to you, all right, let us know by giving us the thumbs up. If you think that this is another blah 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 from George, all right, let us know by giving us the thumbs down. So this will help us to improve our next recording. If you think that this is an essential tutorial that other traders must also know about, all right, feel free to share it on Google+, on Twitter, and also on Facebook. Speak to you soon.